at this point in time. Ajay Srivastava is our market master of the day. He's CEO, Dimensions Corporate Finance Services. Ajay, it's always a pleasure having you with us here on CNBC TV18. Thanks very much for your time. You know, we're coming off this Fed meeting from overnight, and I'm sure you've kind of paid attention to what they've said, and a lot of opinion about whether this means this is bullish or bad news, because you know what they're essentially saying, that the economy is just strong, and we don't see the need for big rate cuts or something next year. So it can be read either ways, and the market kind of flits between reading it one way in certain phases and reading it the other way in others. And I wonder in which phase we are in right now. Is it good that there is good news, or is it bad that there is good news? Go on.
Well, okay, I don't know. Now the conundrum is it bad if it's a good news, or a good news or bad news? All right. So I can't decipher that. All I know is high interest rate in the US don't do well for India at all. And I think in multiple levels, one, Indian interest rates have to remain much higher. There's a pressure on rupee which will keep coming into place. And the fact that interest rates are high in the US mean that they are low on unemployment at that point of time, and which is what is true. They're one of the lowest historical unemployment rates compared to Indian situation. So I think by and large, I think there's a consensus, at least for Indian markets, that high US interest rates don't work for us. And it was some kind of bad news that at the end of the day, they might keep the rates higher at 2024. Because for India, the challenge is the differential between Indian rupee rate and the Fed rate has now become the lowest, I think, since I've known about it. And I think if that starts to kind of hurt India's flows and capital and currency, then India will have to perforce increase interest rates. So the sang-froid shown by RBI not increasing the interest rate, I think could be quite short-lived if you ask me, given inflation where it is going, and US has given a very clear signal, Fed, that we're going to keep it up. So all in all, I don't think a high interest rate, whether good news for economy or bad, is good for Indian market. It is not good for Indian markets and Indian investors.
Okay, high interest rates not good for Indian markets and investors. Ajay, how are you feeling about the markets now at these levels?
Good. Hi, Sonia. I am feeling good about the stocks I own. That's all. Market levels, I love the market level volatility because that what makes my guys some money at the end of the day. And also, you know, fundamentally, it aligns the market with what's happening in the economic fundamentals. So I am feeling very good. There's a correction in the market. We done recently well where we positioned vis-a-vis the Nifty. But I still think that it's a little more way to go to come in sync with what's the economic fundamental. And Sonia, I want to bring you the point that what a landmark data came out yesterday. India is sitting on net household savings 50-year low, which tells you what is the firepower Indian consumer has to buy without resorting to money, credit. And I think that's the one data point which every investor should keep in mind, that do people have enough money without borrowing to buy what we think is going to be a great consumption story. Sobering thought, but keep it in mind, that's going to affect your portfolio for the next couple of years.
Hi, Ajay. Good morning. Ajay,
Good morning.
The big stock that everyone's been talking about is HDFC Bank. You know, one would have thought it's getting attractive at these levels. But what's your view? Do you think there is still some more pain? You would rather wait buy than jump in?
My view is what came on a channel on the day the merger was announced is going to be a very expensive bailout of HDFC Limited by HDFC Bank shareholders, and it is proving to be so. What they did not tell the shareholders was how much is going to be the cost of the bailout. Yesterday it came out, net worth write-off of 20,000 crore. What more will come? We don't know the answer. I think HDFC Bank shareholders got a really rough ride. They didn't need the company. Now they've got this company. They got a cut in the net worth of 20,000 crore, which makes it basically about 1,500,000 crores of loans they cannot give anymore. You know, I don't know why you want to be a HDFC Bank shareholder at this point of time. They had a good run and a monopoly status. I don't think in the next couple of years they will give you superior returns to the market or even the banking industry. I think it's really the last stock you should pick up, in my view, compared to what's happening in other banks. They're growing better, they're doing better, there's more transparency. I think it's certainly a stock we don't own it anymore, and it's certainly a stock we don't intend to own at all. And I won't, I don't do stock recommendation, but you'll be a hard optimist to kind of think that that bank is going to give you returns superior to other banks or the market. So I think just let it be. It was a heyday. It's gone. It's over. It's like the heroes in prime, Indian movies. He's gone and over. We're done with. Forget him.
What? Indian heroes and
Shah Rukh and Sunny
But have come back, yeah.
They're coming back in style.
I was thinking of Anil Kapoor, but yeah, that is also...
Ajay, where are you? The Indian heroes of the last 30 years are back in action. I mean, they're making the biggest blockbusters even today.
Suna, you said it, back in action. So give them a break. They will realize where they went wrong. They will come back to you. So wait for it. Let them do the same story as what Shah Rukh has done, etc. So wait it out. They will come back. I'm not saying not come back, but give them time. They're like Indian heroes. They may come back or they may never come back. And I am in the mood that...
So who are the heroes of the next 1 to 2 years? Tell us that. That's more important, right?
Oh my gosh, 1 to 2 years heroes. Real life heroes are you talking about? Or is we going to have
stock market
elections?
Stock market heroes. What we are more interested in.
I tell you, it's no rocket science at the end of the day. India has got 3 spending stories: railways, defense, infrastructure. Those 3 stories are what is going to play out for Indian investors because these are the kind of contracts which run for multiple years. It's not like you don't buy toothpaste or you buy a new TV. But if you get in a project of a railway security or you get in a project for railway, modernization, these are 5-10-year projects, and they give you enormous income on maintenance, services, spares, etc. So I would still say railways, and particularly MNCs which deal with railways, I think those are best places. Railway security, which is the protection, which is your Kavach kind of stuff companies. Defense certainly is going to have a beautiful run, and the infrastructure companies are going to make hay because these contracts are going to run for 5 years. Anything related to consumption, I think wait for a while. Let the Diwali season play out and see how good or bad it's going to be. There is euphoria on consumption. I would temper it down given what the data from RBI told us yesterday.
Ajay, actually, I wanted to come back to that. So you said that's a sobering thought, but and you said it has implications for your portfolio, right? That I'm talking about the household savings data which came out. So how are you looking at it? Because you began by saying, well, it shows you what consumers can do without resorting to credit. But that also means that savings have been depleted to a very large degree.
So what we have done, right or wrong, we have done is our NBFC portfolio is 0 at this point of time. There's 0 allocation to NBFC sector. We have none in the stock portfolio at this point of time. We have none in the retailing story at this point of time. We've taken everything out of the retailing story. There's none in the apparels kind of businesses, absolute 0 allocations to that part of the story. So I think those we have taken away from the table, a lot of the stuff out of it, and we've relocated it back to the sector that we spoke about. And I think fundamentally that would give a better return in this market because given the way oil prices are today and the government needs to hold it at this point of time for given the election compulsions, somewhere, etc., the taxes will have to go up at this point of time. I do not know whether they'll allow oil prices to go up in retail or they will put in more taxes. Whichever way it works is going to hurt consumption. So I think consumption plays, except the high-end consumption plays, which is the 5-star hotel companies, the airlines, which we are holding off. But everything related to economy and sub-economy, retailing, general retailing, I think we've gone 0. NBFC, we've gone 0. And we're going to play out with the segment of, as I told you, infrastructure, railways, and defense.
Okay. All right. Well, Ajay, we'll leave it there. Thank you very much for joining us. And it's a pleasure.
You enjoy the weekend blockbusters, my friend.
Yeah, I will, Ajay. It's always a pleasure speaking with you. You are one of our heroes. I mean, and I've been, I think, speaking to you at least for the last decade and a half. So, that I guess